Welcome to Invest with Alex, the podcast that helps you understand the world of money one simple conversation at a time. Today, we're diving into a concept that's at the heart of almost every smart investment strategy, yet it's often misunderstood or overlooked. It's called diversification. If you've ever heard the phrase, "don't put all your eggs in one basket," well, that's basically diversification in a nutshell. But in the world of investing, it's so much more than just a catchy metaphor. It's a strategy that can protect your wealth, reduce your risk, and help your money grow more steadily over time. So, what is diversification? And why does it matter? Let's talk about it. Imagine this. You've just started investing. You're excited. You pick a company you like, maybe a tech stock that's doing really well, and you put all your money into it. For a while, it soars. You feel like a genius. But then, the market shifts. The company hits a rough patch. And suddenly, your portfolio takes a big hit. That's the risk of putting everything in one place. When your entire investment is tied to the success or failure of one thing, one company, one sector, one country, your chances of losing big go way up. That's where diversification comes in. It's the idea of spreading your investments across different assets so that if one thing goes down, everything else doesn't go down with it. It's not about avoiding risk entirely. Risk is part of investing. It's about managing risk. Let's make it more concrete. Let's say instead of investing all your money into one tech stock, you invest in several companies across tech, healthcare, energy, finance, and maybe even a few international markets. Now, if one company has a bad quarter, or if one industry takes a hit, the rest of your portfolio helps cushion the fall. That's diversification. It's kind of like building a team. You don't want a basketball team made up of only point guards. You want a mix: shooters, defenders, rebounders, people who play different roles and balance each other out. Same with your portfolio. Stocks give you growth. Bonds give you stability. Real estate might give you passive income. Cash gives you flexibility. And international investments might offer protection from local economic downturns. When these are all working together, your portfolio becomes more resilient. Now here's something important. Diversification is not about chasing returns. It's about building a long-term, sustainable strategy. Some years, stocks will outperform bonds. Other years, international markets might outperform US markets. Sometimes real estate booms and sometimes it stalls. That's normal. But when you're diversified, you don't need to predict which one will win. You're already holding a mix. So, no matter what happens, you're in the game and you're protected from the worst-case scenario. And over time, history has shown that a well-diversified portfolio can grow steadily even through recessions, market crashes, and global events. Let's pause for a second and get real. Diversification won't make you rich overnight. It won't protect you from every loss. And it doesn't mean you can ignore your investments completely. But it does give you balance. It gives you time. It gives you peace of mind. And when markets get rocky, and they always do, that kind of peace is priceless. You're not trying to win the lottery. You're trying to build wealth. One smart decision at a time. And diversification? It's one of the smartest. So if you're just starting out, or even if you've been investing for a while, take a look at your portfolio. Ask yourself, am I diversified? Or am I betting too much on one company, one industry, one outcome? Because the truth is, no one can predict the future, but we can prepare for it. That's what smart investing is all about. Thanks for tuning in to Invest with Alex. If this episode helped simplify diversification for you, consider sharing it with a friend. And don't forget to follow the show. We're building your financial confidence one episode at a time. Until next time, stay curious, stay balanced, and invest smart.